Senator suggests that tax cuts could transform Australia into a crypto hub. Defining the regulatory agenda. As it attempts to set a regulatory agenda for the sector, the federal government has hinted that preferential tax treatment for cryptocurrency businesses is on the table. Senator Andrew Bragg, who chaired the Australia as a Technology and Financial Centre Committee last year, stated at a Blockchain Australia conference that he does not want Australia to miss out on the opportunity to become a blockchain hub. Australia had hoped to become a hub for asset management, Bragg once said. That has not occurred. 96% of the funds under management are domestic, he said. He attributed this to a previous Labour government's failure to pursue the necessary legislative changes to attract the sector, and stated that he hoped to avoid this happening to the blockchain sector in the future. Bragg told the conference that 4 key policy actions should take place before the end of the year: terms of reference for the Board of Taxation, which will establish an inquiry into taxing crypto assets, an inquiry into the causes and policy responses to debanking by the Council of Financial Regulators, consultation on the market design, for example, licensing, of crypto markets, and a final consultation on the custody regime, which will cover custodial or deposit services. The reality is that we do not live in a libertarian utopia, Bragg told the conference. Regulatory arbitrage is not an option. There is widespread agreement on the importance of addressing proper legal design. To reduce the possibility that Australia will miss out on its cryptocurrency hub opportunity, Bragg suggested that instead of attempting to amend the already complex Corporations Act, we should have a very simple, clear, and clean Digital Services Act. DAOs, which some believe could replace corporations, should also be investigated as part of any cryptocurrency regulatory regime, according to Bragg. He warned that the rise of DAOs could cause mass tax leakage because they are taxed as partnerships rather than corporations. He stated that company tax accounted for 17.1% of Commonwealth revenue in 2020/2021, which he believes is double the OECD average, and that he believes this is unsustainable. The key principles for regulating DAOs are that there is a consumer protection framework in place, as well as audit and disclosure standards, replaceable rules, rather than company constitutions, to standardize DAO governance protocols, and limited liability, just as there is for companies. Bragg elaborated on how the tax system must accommodate Australia's ambitions to become a cryptocurrency hub, saying that you cannot be a serious hub unless you are competitive on taxation. People like me will have to make the case in public that a tax cut in this space is needed, he continued, because he wants Australia to be seen as a jurisdiction that people want their business in, because our tax system is clear and clean, just as our regulation is clear and clean. While he does not advocate for Australia to become a tax haven like the Isle of Man or Bermuda, he does believe we need to be more dynamic, adding, "We shouldn't be afraid to look at tax havens as inspiration for regulation."